world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're joined by David Vélez. David is the founder and CEO of Nubank, the leading financial technology company in Latin America. Nubank has 5 million credit card customers, 2.5 million bank account customers, and has raised $420 million from investors including Sequoia, Tencent, Tiger Global, QED, Founders Fund, and more. Nubank was recently named the third most innovative company in Latin America by Fast Company. Before founding Nubank in 2013, David was a partner at Sequoia in charge of the firm's Latin American investments. Before Sequoia, David worked in investment banking and growth equity at Goldman, Morgan Stanley, and General Atlantic. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you enjoyed today's episode and appreciate what we're doing at Rebank, we would be extremely grateful if you would leave us a review on iTunes or your podcast platform of choice and recommend us to a friend. Thank you very much for joining us today. Please welcome David Vélez. David Vélez, welcome to Rebank.
Thank you, Will. Pleasure to be on.
So you're the founder and CEO of Nubank, easily Brazil's, I guess probably all of Latin America's leading challenger bank, fintech, call it what you want. Give us the very quick description for those who aren't familiar with it of Nubank and what you guys do.
Sure. So we are a digital bank based out of Brazil, today only operating in Brazil. We started with a physical credit card product targeting millennials with a fully digital product and service behind it. That was our focus for the first few years. We launched in 2014. Today, we have about 5 million credit card users. And since last year, we also launched a digital savings account for about 2.5 million of those consumers that also provides a number of other financial services to those consumers, including in auto investing features, peer-to-peer transfers without any cost, and all the entire process, customer service process around it is fully digital. So that's where we are today.
So I've heard you speak in the past about some of the initial skepticism around the proposition, which was, I guess, some of the same concern that had been flagged in a lot of countries, which was no one's going to trust a new digital-only proposition. I think the audience in the UK and the US are kind of familiar with the way that's played out. Set the scene for us in Brazil. I mean, how entrenched are the incumbent banks? How technologically savvy is the customer base, and where does kind of Nubank and a digital financial proposition fit into all this?
Sure, yeah. So Brazil is one of the most concentrated banking sectors in the world. There are 5 banks that effectively own 90% of everything, of credit cards, of lending, of savings accounts, of insurance. And that is one of the main reasons why you also see one of the higher spreads in the world in the Brazilian banking system. There is just very little competition. We started with as a technology company offering financial services to consumers. We had the big advantage, obviously, of designing a technology architecture from scratch, starting from a blank sheet of paper, of having a culture of a technology company and not of a bank. And so with that, we've been able to run faster and provide products that are much more consumer centric. And that really is what differentiates us at the end of the day. Given the big concentration of those Brazilian banks and how much margins they've done historically. They really forgot they had customers. Customers for them are these unnecessary people that are calling their call centers every day. And so they've never designed customer-centric products. They've designed products that are optimized to charge one more fee here, one more fee there. And so consumers have an incredible frustration, a very, very high frustration on with anything related to banks. So starting from scratch, we were able to design these products that are very focused on customers, on the customer experience. And we've been able to use digital channels to provide a great consumer experience to this type of products. Obviously, banks have reacted. All of them have reacted in different ways, from some of them creating completely new companies to compete with Nubank, some of them simply improving their app or improving their website. But ultimately, they are much more of Barnes & Noble stores building a website or Blockbusters building a website, rather than a Netflix or an Amazon or a technology company that was able to create a culture and a technology platform from scratch and have a culture that is really thinking about consumers every single day. So their success of their digital responses has been very limited.
Mm-hmm. How much of a feeling of kind of a pent-up demand for something digital, efficient, functional among the Brazilian customer base was there versus just a demand for something cheaper and easier to use?
Yeah, so both kind of are pretty interrelated. The reason why we were able to offer products with no fees is because we're fully digital. We don't have the offline branches. We don't have all this very massive, expensive infrastructure. So the fact that we're digital not only gives us an advantage on being more operationally efficient, and we're able to pass that efficiency to the end consumer via lower fees or no fees. And customers really obviously care about that, particularly in a market like Brazil, where consumers are paying some of the highest interest rates and fees in the world. So a big part of the value proposition is the lower pricing, but then their customer experience is also ends up being one of the reasons why people just stay, and they use more and more and more of our products, and our attrition rate, for example, is basically zero. Consumers have been historically very, very frustrated with banks. A lot of the millennial consumers and young consumers today, they would be willing to pay not to go to the branch. The branch and the physical infrastructure is a liability, is not an asset in their view. And what they really are doing with the big banks, is they're actually paying for this infrastructure that they don't want to be using. So being able to do everything on the phone is an improvement in their customer experience. We are able to approve a credit card in seconds. We're able to get a physical credit card to consumers in 24 hours, and they're able to start using a virtual card almost immediately, versus going to a branch and waiting 3 weeks or 5 weeks and bringing a lot of paperwork and talking to a branch manager and wasting hours and hours of valuable time trying to open a bank account. So the fact that it is all digital, there is also a lot of pent-up demand for that. I would say particularly more on the young demographics that we serve. Obviously, there are some demographics that today we don't serve. We don't consider them as customers. If you are 70 years old or 60 years old and above, you probably still want to go talk to the branch manager. You probably still have time to go have a coffee with that person and sit there for a few hours.
Mm-hmm. What approach have you guys taken to regulation? I imagine that part of the reason you started in credit cards was that maybe it was less regulated than traditional banking. The bank account that you guys operate, is it actually a bank account? Is it a bank-like account? I mean, what's the regulatory approach?
Yeah, so Brazil is one of the most regulated banking markets in the world. It's so regulated that in the constitution of Brazil, there is actually one paragraph that prohibits foreigners to invest in banks. So it's one of the few countries in the world that actually is that has its banking industry so protected from foreign competition. The government eventually try to find ways to open up a little bit. And in our case, since our investors are foreigner, we had to go and get a presidential decree to be able to get a banking license. Today we have a banking license. But initially we had to begin with what it's called a payments license that allowed us to offer a credit card, but it didn't allow us to lend. So we had to rely on a banking partner to be able to finance the revolving portfolio when customers would go into the financing. We had to do that with a banking partner. What the other thing that we have found is while the regulation is very shut down and it's hard to crack it, the willingness today of the regulator, which is the central bank, is to open up competition and to welcome new entrants. So we've also been able to establish extremely positive relationships with the regulator here, and we found a regulator that is really thinking actively about competition and about removing barriers of entry. So in that sense, it's a really good environment to be doing what we're doing, and it hasn't been easy to navigate all the different regulations. And you have to navigate them. You have to take an approach of let's be helpful and let's respect the regulations that exist. Because if you end up not following the regulations, it's an area where you'll end up in jail in a second, and where the regulator will not be forgiving. It's taken extremely seriously for companies to follow the existing regulatory. So our mindset since the very beginning was, it is what it is. The regulatory framework exists as it is. We're not here to change anything. We're here to be more efficient and thoughtful and smart about how to create a digital bank or challenger bank within the existing frameworks. And I think that's the approach that we've taken since the beginning.
Yeah. So I think you guys have had something like 20 million credit card applications. You've got 5 million credit card customers. I mean, I could make some assumptions, but it'd be interesting to hear from you. To what do you attribute your rapid growth?
The most, it really has been to build a product that just consumers are really crazy about. They're really happy about, and selling that product or offering that product to a market where consumers for decades have been so abused and so frustrated. We measure a net promoter score, which is the metric that we look at customer experience. Ours, a net promoter score since we launched has been close to 90, it's 89 to 90, which is the highest NPS we found for any consumer company in any country in the world. So that is what we think has driven this incredible demand, and the fact that we continue to grow even 5 years after launch, effectively without spending any money on marketing, or customer acquisition cost continues to be zero, even though we passed 5 million customers.
And that's because there's so much word of mouth referral?
That's right. Yeah, people love the product so much that without we paying them anything, just because they feel very strongly about the product, they become our biggest ambassadors, and they just refer us to everybody that they know. So that continues to be our main and effectively only customer acquisition channel.
Yeah. So that net promoter score of 89 to 90, is that so high in your view because you guys offer such amazing service? Is it because of the expectations that people bring from decades of underwhelming traditional banking? I.e., is a part of it expectations and a part of it is actual performance, or is it a different combination?
I think it's a lot of different small things. Part is definitely where the market has been historically and the expectations that consumers had on banking services. I would say that was probably at the beginning because nobody knew us and nobody expected this type of service and product from a bank. By now, people know us and they sort of expect this. But now is more about how we maintain and provide that customer experience. And within the customer experience, there is a number of different things, from pricing differences to the customer service we provide, the transparency we give consumers, ultimately the culture. I think that we operate internally and the way we use that culture to provide great experience to a consumer. So we always say that consumers really are buying our culture. They're not really even buying our products. And we think very high, we feel very strongly that that's the case. And that's why ultimately it's very hard for banks to imitate what we're doing, because it's less about the app, it's less about the credit card or the digital bank. It's more about when they get in touch with us, the way we treat them, when we have a problem and consumers have a problem, the way we react, and we continuously seek to just wow consumers and give them something better than they ever expected.
Can you give me an example of that? Because it's just kind of mind blowing to think that credit, this kind of industry which kind of operates on a slippery slope, i.e., everyone wants it, but then there's almost a tense adversarial relationship in many cases between borrower and lender, and as soon as things go bad, then borrowers immediately begin hating lenders. So how do you kind of maintain that high customer support net promoter score? Are there I don't know, examples of how you go above and beyond?
Yeah, I mean, I think I think a lot of what we've done is just kind of break that conventional wisdom about how adversarial that relationship needs to be. Ultimately, I think we're allowing a lot of people to just pay their bills and pay for their trips, and maybe another thing that it's important to mention is we today target transactors, so actually people that pay their bills on time. When historically credit cards, or if you look at a lot of, at least in Brazil and maybe probably globally, most credit card issuers make all of their money out of the people that pay the finance charges, and so that creates a misalignment of incentives where the institution is rooting for the customer not to pay the bill, is rooting for the customer to forget 1 day or 2 days to pay. Our goal since the beginning was to be aligned with consumers, and our ideal customer is a customer that paid the bill on time, and where we make money on transactors, not revolvers. And so with that, we're very aligned with the customer. We're rooting for the customer to pay on time. We thank the customer to pay when the customer pays, which is already strange. Customers tell us, "You're the first bank that ever thanked me for paying my bill on time." So I think that helps in just being aligned with consumers on that end. But then when consumers are financed and they don't pay and they lose their jobs and they just are not able to pay the bill, at that point we're still constructive and we are trying to be helpful to a consumer. We are trying to help them think about how to pay their bills, and we even give them financial advice, and we try to be as helpful as them when something happens. And so we don't feel that we need to be adversarial. And while obviously for us it's not good when somebody doesn't pay, we just think that a lot of customers want to pay. It's just they lose their job or fundamentally they ended up getting over indebted, and we just want to have a different type of relationship with those consumers, because ultimately we're building a company for a very long run. We want to be around for decades, and we think while some of these customers might not be able to pay today, hopefully 2 years from now they'll be back on track and we'll be able to offer more services. So we take a very long-term approach on all the relationship we build with consumers. And while we obviously need to collect, and credit losses is our bigger cost, we think that once you take a different approach, you're able to build and maintain trust with consumers and able to maintain a very strong relationship.
Mm-hmm. What's the main revenue driver? So I understand it's a no fee model, and you're targeting transactional customers. In your words, those that pay off their balance each month. What's the core revenue driver?
It's interchange. So it's the percentage of that we get from merchants when somebody pays with a credit card.
Easy. I'd love to kind of switch gears slightly and hear a bit about some of your recent fundraising. So you guys were in the headlines, I think just maybe last month, 6 weeks ago, at the time of recording, having raised money from Tencent. I'd be super curious to know how that came about. Did they approach you? Did you approach them? And how did those how did that deal take shape?
Sure. Yeah. So frankly, when we started a company in 2014 here in Brazil, where there is not a lot of technology companies, we used to go to, I always tell the story where we used to go to Silicon Valley to grab my co-founders to go to Silicon Valley and have them see what type of tech company we wanted to build. And there was a lot of different things for us to learn from Silicon Valley companies and a number of technology companies there. We did the same trip last year, but now we found that we have way much more to learn in China than in Silicon Valley. We went there last year, and for us, it was pretty clear. It almost felt like we were traveling through time. And once you land in Beijing and you see how financial services is being done, it is pretty clear that they are ahead of anybody globally on how they think about financial services. And so as we think about who we can learn from, Tencent was pretty much on the top of that list. I don't think they were necessarily thinking about Brazil initially, but once we've been in discussion with them for a while now, and they realized the opportunity here. And for us, it was a great opportunity to learn from somebody like them. And so it was, while we didn't really need any capital, we raised around in February. We found a way to get them as investors and more importantly, as partners. And we expect to just learn a lot from them and in creating the financial services landscape of the future here in Brazil and in Latin America.
Right. So tell me about next steps. What are you guys' future plans?
So we're still very focused on building a complete financial services platform. We're still in the early days. We have a credit card and a digital savings account. I can't really get into specific details on product, but I think our long-term goal has always been that consumers can have all their products that they need in financial services at Nubank. And so in terms of next step, that's the roadmap that we're following is what are the products that consumers are actively demanding that we're not able to provide today. And those are the stuff that we want to be offering to them over the next 12 months, let's say.
David, what's the best way for people to connect with Nubank and find out more about your guys' work?
You can reach out to me. You can reach out to our social media team. You can send an email to todomundo@nubank.com.br or get in touch with us via Facebook or Twitter.
Excellent. David Vélez, thank you very much for joining us today.
Thank you, Will. It's been a pleasure.
Thanks for tuning into Rebank. If you liked today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.